Good afternoon, Zinger Nation. This is Justin Roberti here with Web3 Anarchy. Thank you so much for coming and joining us today. Always pleased to see you here. Please hit the like and subscribe button if you are so moved. If you're not, that's fine. You could just wait, hit it later. It's no big deal. But, do eventually, because why not? It's good to stand out in that way and show you support for the show and yada, yada. Anyway, today we have Kell Canty from Ledgible. I believe he's the CEO of Ledgible, coming to talk to us. They essentially do crypto tax software to help people manage all of the vagaries in the tax code relating to cryptocurrency. I know, what a bummer subject during a down market already, but I think that it's kind of important to touch on these things now. I mean, for one thing, because some people are in the position of either maybe wanting to or having to get some money out of crypto in the first place, and there's the whole process of offboarding and how to get hurt the least in doing that, but also just to have as clear a picture long term of your financial situation as you can, which involves regulation and therefore involves taxation. The two seem to go hand in hand. So please ring in with your questions if you have any, and I'm going to go ahead and bring Kell on right now. Hello, sir. How are you?
Great. How are you doing, Justin? Really glad to be here today.
Good to have you. Thanks so much for coming on. So tell me a little bit about what Ledgible does. Ledgible has more of an ASP-based model with software that you can access, I believe, or how is that working?
Sure. Software as a service, like you mentioned, another term for that is ASP. But we provide the capability both for businesses and institutions to do accounting of crypto and figure out tax and categorization. We've got some great projects and chains. Actually, people like Algorand and blockchain.com and others utilize our services in that regard. Oh. Storage Engine Token. You may have heard of some of these really great projects and companies.
Well, we've had some of them on the show, actually.
That's great. Love to have that company. And then also, because anytime you look at crypto, right, it's a taxable event pretty much, the way the IRS is classified as property, right? And you can debate about that, and we did back in the early days. I've been in crypto since 2013, and I was hoping that we'd have a treatment as a real currency. But for the time being in the foreseeable future, treating property. So you've got to calculate the taxes. We support individuals doing that on themselves, but also we've got great arrangements and partnerships with professional CPA firms. They use our platform and are able to do that and integrate into professional tax systems as well. So we help CPA and other financial professionals, including some wealth managers and financial advisors that have people with crypto, as well as the individuals and then businesses and projects that need to be able to account and handle all the filings and accounting needed for their company.
So from your perspective as someone who always has your hand in tax code as it relates to crypto, what was your reaction to the things that are put in motion by the Biden executive order from about 2 months ago, roughly? I think we talked about it a little bit on the show. It does seem, it seems like there are some promising things in there, but in terms of creating a structure, but what are your thoughts on that?
Well, I would say just from an overall view of crypto from the federal government, I think the executive order was a good thing for us. So, if we're having issues with the IRS and the CFTC and the SEC, all trying to figure out who owns the regulatory space for crypto, then maybe having them work together and come out with a good framework for that is the way to go. There's a couple of other things that are constantly evolving. I'll mention that the infrastructure bill that was passed and signed into law by Biden, included the information reporting, the tax information reporting that's going to come up. We've heard recently that there might be some changes to that, and we're still waiting on some things from Treasury. And actually, Treasury has done an initial response and started asking for comments, and we'll be commenting back to Treasury. That's the department in the federal government that the IRS comes under. IRS is a part of the Department of Treasury. And so we'll be commenting on that in terms of their initial thoughts and questions around how they can respond to the order. But quite frankly, we're something like this is needed. Who's going to be the primary regulator, and what are the rules? I mean, we've only gotten 2 pieces of actual guidance from the IRS. That's 2014-24 and 2019-21. And those are really insufficient given how DeFi and other things and the complexity of crypto come about. So we're looking forward to more rules of the road and how we should treat things, and kind of like stop the interagency thing and kind of give a clear picture for everybody in the crypto ecosystem. We may not agree with what comes out of it completely, but it's better than not knowing if they're going to change it, in the middle of the game, right?
Mm-hmm. And lacking a standard, it seems that there's a lot of redundant reporting, isn't there? There's been some discussion lately. I was seeing on Twitter about whether Gemini is just reporting every time there's a transaction in the account. I mean, of course, I don't know if that's literally true, but it does seem that you're in a position where certainly Gemini might be reporting on their end, and then you as the buyer have to report on your end as well. It seems like there's a lot of redundancy that I think they hope to consolidate.
I think so, and I think they're still coming to grasp with crypto. So, for example, a somewhat common scenario is somebody buys a Bitcoin for, let's just use round numbers, 10,000. Hopefully, we're not going to that level again. But buys a Bitcoin for 10,000, and then on Coinbase, and then a coin that's not listed on Coinbase. They hear about that from a friend, Hot Coin 73, right? And that's listed over on Kraken. And maybe it's a Sunday, or maybe they don't want to contribute any more fiat into opening a new account, and opening up new accounts at exchanges can take weeks and weeks. If you're doing fiat KYC as compared to crypto. So you take half of that coin, so it's worth 5,000, right? If you take a half in terms of what you bought it for, and you transfer it directly crypto to crypto over to Kraken, and you use that 5,000 to buy hot coin number 73, and then you sell that a little later for 6,000, right? So what's your gain on that? Your gain is 1,000. You moved in an asset that you bought for 5,000, and then you ended up with 6,000. Your gain's 1,000. However, Kraken doesn't necessarily know how much you paid for that at Coinbase, right? And so you do need a system in the middle like ours that will say, oh, connect us to, Coinbase, connect us to Kraken, and we'll see both sides of this, and we'll know that you bought that Bitcoin for 5,000 and you move it over. So when we calculate the taxes more accurately, then we'll say you owe 1,000. Now, Kraken's being forced by the government in these new rules to report on this, and they're taking the most conservative approach in most cases, which is to, if I don't know the cost, I'm going to assume worst case, which is 0. So you may get reporting forms that are mandated to be reported that they don't have enough information to solve that for, and will say that you have gained $6,000. And so, there's situations like that arising when you have things like being able to transfer crypto back and forth between, your own self-hosted Trezor or Ledger, and then back up to another exchange. And without a central point, administered by the our software with the CPA or the consumer or the business, those different places can't see how much you paid for things, and are inevitably, I think, going to get some of that reporting incorrect because they don't have enough data.
Right. And, of course, in the situation that you just pointed out, because crypto is still being treated like a commodity because of capital gains tax, just sort of thinking that one through, like if I did that, if I were to try to cash in that crypto worth $6,000, which I had made $1,000 profit on, the taxes alone would wipe me out for like a little bit over a third of it, somewhere around 40% of it, at which point I'd lose my profit. I'd take a loss on it.
Well, it's going to depend on how long you held it. Obviously the long-term calculations, holding it for over a year and a day, could apply those long-term capital gains, which is, important to think about. If you're close to that, if you've owned it for 7 days, you're not going to hold it for another, 358, right? But if you're close within a week or so, and the price is kind of stagnant, we've been kind of crabbing lately since, we dropped down to this level. Maybe it's something that you consider, because rather than getting it taxed at, short-term rates, which is less than a year, which is kind of equivalent to your regular income tax, you can take advantage of long-term capital gains, which are substantially lower in most cases.
So you had said something right before we started the show about, hoping for the federal government to treat cryptocurrency more like a currency. And I'm all for that. There's certainly there's been a lot of speculation that's gone on in the market, which has caused some of the bull run that we had, but of course leaves us where we are at this point too, which is at a very painful point. What kind of regulation are you looking for? Like, a lot of people have come out and said, we need guide rails in order to stabilize this market. What do you think they need to clarify for us?
So, specifically if you're talking about, 3AC and the contagion that's kind of like gone through that, from my understanding, and I think this is largely correct, is really based on the lending and the leverage, the two L's involved with that. And I think, there's certain countries, outside of the US and even in the US, they're not necessarily looking or familiar. I talked to a ton of traditional financial professionals, and to a person, like 99 out of 100 of them, they think, oh, crypto, well, that's just buying and selling, just like a stock. In fact, they'll call crypto shares. I bought half a share of Ethereum. And it's a little painful to hear it because that's not the right terms, but they don't even understand that people are getting loans. They're participating in staking and DeFi and earning income that way. So I think the lack of, intimate knowledge around the possibilities in crypto, quite frankly, what we've done with this lending and leverage to a certain extent is not had good reporting on it, not have regulators that are aware of it, and then really replicated the mistakes that have already been done in traditional finance that really, we shouldn't have done. And we're kind of paying the price now, but hopefully it's going to be clear out, and some of this regulation will avoid that sort of thing. And also the accounting to be ensured that you're not doing things like, I loaned a Bitcoin to someone who loaned a Bitcoin to someone rehypothecation is the act of taking an asset that's been loaned to you and loaning it out again. And I think I've heard rumors that there's been somewhat like 7, hops in that, right? So at what point, when we're talking about verifiable hard currency with Bitcoin and knowing that and being able to assert that this is, not a fractionalized thing, if we're letting, and allowing the ability to reloan and have all this leverage and loaning in the books, I don't think that's really appropriate without really tight oversight.
So now we are in the crypto winter of our discontent. To quote Shakespeare, I put that in a headline one time and they changed it. I guess it was too esoteric. But now we are certainly in a crypto winter, and everyone's feeling it. You can tell, of course, the mood is very different from maybe a year ago on social media. Let's go through two scenarios which I think are very real things. And hello, Allison. Thank you for joining us. Everybody, ask questions if you have any. One is, what if you are in the maybe undesirable position of feeling that you need to liquidate some of your assets in order to cover expenses, in order to cover taxes, or what have you. What is the best way? What trap are people putting themselves in terms of kind of maximizing their pain in doing that? How do you avoid that? What is the best way to go about this if you're in this already undesirable position of having to liquidate some of your position?
So one of the things that we talk about there is the ability to understand what your overall exposure is from a tax standpoint, right? Let's say you have $1,000 of Ethereum and $1,000 of Bitcoin. Maybe you got in early on, Ethereum, and you paid $10 for it, right? And then you just recently bought the amount of Bitcoin at whatever the, very close to whatever the market rate is now. If you're using a software that includes planning, or you can track that, and you're like, well, if I sell the Ethereum, I'm going to have $990 in gains that's taxable, whether it's short term or long term or whatever. You originally paid $10 for it and you sold it for $1,000, and Uncle Sam is getting their share. But you recently thought, well, flight to quality, and you had a lot of other little coins, and you saw, the way the macro environment's coming, and you said, I'm going to get into one of the flight to quality, like, Bitcoin. And so you basically bought it very recently for almost what it's worth now. And so maybe you bought it for, 21, and now I think we're in the 19 range. And again, maybe you only had $1,000 worth. So maybe, you have just a little bit you might have even lost a little. So you sell that to get your expense money, and you do it with tax consequences ahead. And then all of a sudden you don't owe any tax. Whereas if you sold the Ethereum, you owe tax on $990. So being able to realize what the tax obligations are for each coin that you have, and even tranches of the coin, if you bought, X amount at 10, X amount at 500, X amount at 2,000, and how that looks, you can actually understand how to liquidate that in a way to minimize your taxes.
It sounds like in the position that we're in right now, it's incredibly important to keep your own records for exactly the situation you just described to me. If I take something and move it over to eToro instead of off of Binance or off of Coinbase or what have you, they might actually list it as zero, and that's all profit. I have to be able to prove that with my own records in order to sort that out, don't I?
Yeah, and actually, I would say there's other cases, because if you think about some of the exchanges that are having issues, we're hearing that more might shut down.
Right.
Think about the classic example. I was around when Mt. Gox went under. Quadrica CX recently, well, not too recently, about 3 or 4 years ago. So if you're not syncing up with a software that's tracking all those movements, we tell people to do that on a regular basis, because if you're trying to remember in April what you did back in January of the previous year with crypto, I bridged that over to, Boba chain, and then I got some Oolong staking, and then, it's hard to remember some of these operations, particularly when you're trying stuff out. So if you do it constantly, you'll ensure that if that exchange has an issue, that you've got that data, and you don't have to be going up to your CPA or the IRS and saying, I have no idea how I got that. I have no idea what the transactions were. I've lost all cost basis because the exchange went under. You don't want to be in that situation, right? It opens you up for situations. And so I think it's really good to do that. And the other thing that you mentioned, if you've got more than one exchange or wallet or anything, you need to, and you transfer between them, I mean, I do that all the time. You need to have that cost basis carried over, because it's important, and you're going to have to report it.
Famously, recently the Indian tax law has taken a lot of consumers out of the market.
Yeah.
Do you see any missteps coming up with our own tax law, either that have already happened or maybe are maybe in danger of happening, in terms of really making it kind of undesirable? I already question some of what's in place because it seems punitive. Like, from most people's perspectives, I think most people buy and hold because they don't want to run into this. And frankly, some of the people investing in crypto were investors before, but many of them were not. So they're not necessarily familiar with handling a portfolio and having to assume tax burden around that. What direction do you think the U.S. should really go in terms of overseeing this?
Yeah, and I'll say that I've seen numbers as high as 70% drop in trading in India due to the new tax law. I don't know that you can attribute 100% to it, but it's a very large percentage. Obviously the market downturn, but that's, if you think about if we'd had bad laws applying to the internet in the 90s, where would we be? That's a little troubling in terms of how powerful things like taxation and regulation can be on emerging new technologies that can change the face of the earth, like crypto can be, right? So I think it'll be interesting. There's more stuff coming out of Treasury, and I think that they need to do this with a thoughtful approach. I also think that there's some aspects. We recently supported Abe Sutherland and the Proof of Stake Alliance, along with the Jarrett case in Nashville. Those were a couple that were bakers, which is what they call staking in Tezos. And they actually got to the point where they demanded, they sued for a refund of the staking rewards being counted as income when they earn them, as opposed to just capital gains when they sold them. So it's kind of a double taxation. And there's a lot of good tax law precedent around that, but I think it should be strongly looked at. And I'll note that the IRS actually dropped that case. And so I think the reason they did that is because then it's still unclear. You don't get a final decision. So I kind of wish it had gone on. And I think, Abe and other people are going to be going after that to get a final decision. I think it makes a great deal of sense, particularly for things like DeFi and staking, to consider that model wherein if you're growing corn, you don't get taxed at the point in time. You get on harvest, you get taxed when you sell it, right? And it seems to make sense. And all the tax experts I've talked to, but we don't know if that's going to change. It may not change, but I would say they need to be thoughtful. They need to understand the technology and the implications. They can't just say it's just like stock because of things like DeFi and staking. And I think they should take a hard look at, particularly at staking, and think about whether that income component should apply to rewards.
So if you are a project, on the other hand, you're using your SaaS model as ASP, I guess I had my head 10 years ago thinking of what we used to call application service providers. But yes, you're right. So you're a SaaS model business, but you're working with Tezos and a number of other large blockchain providers and so forth, of the large blockchain concerns, especially when they are working off of a foundation. I mean, especially for the blockchains themselves, like Tezos. So they're kind of set up to work in a decentralized manner and be something that continues on very long term. At least that's the intention. How do they deal with what is? I mean, not Tesla specifically, but if you are, you're a DAO, you're working through a foundation. How do you manage tax burden, especially with so many moving pieces of money coming into the network and leaving the network? That must be, strikes me as incredibly complicated.
It can be, and some of the things around DAOs are still being figured out. There's a couple of states that have kind of talked about it, and then there's discussions of how it should be considered and taxed as a partnership. But in terms of the foundations, typically they are in good jurisdictions, say the Caymans or BVIs or Singapore, and things of that nature. And then you have kind of if you have a U.S. component, which some of them don't. It's a big world. But we're a little U.S. centric being located in here, that you might have a technology group in the United States that the foundation pays to develop and extend the blockchain. And so you get into things like transfer tax and pricing. And it's very important to get, good legal and professional accounting help to understand that. And then, obviously you've got to get the right tools and the right people to do it. It can range from being, somewhat straightforward, complicated, to hideously complicated. And then, we're also breaking some new ground in a lot of cases. We help some DAOs do accounting as well. So, some people think that we've got to actually get into the DAO and understand, all the governance and the voting and everything like that. But in the reality for the accounting and tax, we can simply watch the controlled wallets and understand where the funds are coming from and see the funds flow and do the basics of accounting and tax with that. We don't necessarily have to understand the structure of the actual organization. We're just looking at, what came in, what was inventory, what did you sell, and at what price did you acquire it, and what price did you sell it at? So at some level, the accounting and tax is somewhat straightforward, but when you start doing international things, and this is true whether you're doing it with regular fiat or if you're doing it with crypto, you've got to have some good structure around that. And if high quality projects do have that and they've got the right advice on it.
When you've got a project that is not handling its tax obligation in a forward-looking or future-oriented way, what does that mess usually look like to you? I get the sense. I've seen a number of projects from various points on the bystander on the sidelines, where you get the impression that there wasn't necessarily an appropriate level of long-term thinking about finances, and that being one of the most common Achilles heels to blockchain projects if they don't have a technical failure. So in terms of tax burden, when it's mishandled, what are people usually doing? Just putting their heads in the sand and ignoring it?
Well, from a project or fund basis, I think you may have noticed that I think something coming out of Singapore, and again, this is kind of a global situation, because of all the notoriety and the impending bankruptcy a couple of weeks ago. One of the first authorities that goes in there and starts investigating the books are around the taxation, right? What is allocated? Have you paid your taxes? And so it's kind of like the old situation where that gangster back in the day, who murdered hundreds of people, got put in jail for tax evasion, right? I will say that we have helped many individuals through their CPA firm. We've had talking to a CPA firm that's upstanding, top 25, and then say, hey, can you guys do back years? Can you do things? And we're like, well, why? Well, we had a client call us and say, hey, I've received notice I'm being audited. And they're like, we do your taxes. There's nothing for you to be audited about. And the client then says, well, I didn't tell you about my crypto trading. And I've made X million dollars and I started back 7 years ago. And so we get involved sometimes at that point and saying that, okay, our platform can go back, to 7 years and more, and we can start running those and figuring out what should have been paid and give you a certified listing of all the assets and transactions. And at least you don't go into the audit, investigation with the IRS with, an empty hands. We don't follow it past that. That's the job of a CPA and professional financial. But so I don't think it turned out great for anybody who didn't report, millions of revenue, and say, oh, I didn't know. But at the very least, the defense and the negotiations go better when you've actually got the documentation backed up, right? And the IRS knows what's going on. They've got chain analysis tools to see transfers. They've got obviously at the end of the day they just issue legal summons to the exchanges, and so they get the names and the numbers and everything like that. So and in many cases, just like when we're talking with the reporting by the exchange, not knowing the cost basis, they may actually overestimate. So it may be that the guy made $1 million over 7 years, but they don't know, and they're estimating 3 million. At the very least, if you come in and again, you don't want to be in the scenario in the first place. Track your transactions and report your taxes to the best of your ability, right? And you should use software like ours or others to do that, right? And do it on a continual basis. But at the very least, get it accurate and have certified things that if something like that happens, that you're able to do it accurately and avoid any misrepresentation. I will say that also the IRS has put crypto and is retaining crypto as one of the top 3 priorities for them and their agents to pursue. So, it's something that's important and is going to keep being more important, right?
Is that because of they're looking for new revenue? I mean, the IRS has certainly had, its revenue has fallen precipitously since the 70s. Every single year we give out more tax cuts. So, I mean, is that a matter of going after new revenue, or why is it a priority to them?
It's a priority because they obviously with the adoption, I mean, we're at over 50 million Americans, using crypto, and having that. You're seeing it on CNBC, which if you told me back in 2013, I would have been, that's crazy talk, but it's where we are, which is fantastic from an adoption standpoint. And then you're seeing all these, crypto millionaire or crypto this, or, and the fundraising as well. And they don't fully understand or have visibility into it. And so they're like, we have to get a handle on it. It's kind of, there was a similar situation back in the day with Swiss banking accounts where people would put money in there and nobody would know about it. And it wasn't that they knew people were acting badly. They just knew they didn't have the information. And so anything that looked, slightly suspect, they did that. And they ended up brokering an accord with the Swiss banks, not like the Swiss banks are like crypto, but, they found billions of dollars in tax revenue. And I will say that the infrastructure bill is projected to bring in $28 billion in tax revenue over the next 10 years. Right. So it's a fact of they don't have visibility into it. They're seeing tons of media exposure about people making large amounts of money that they're not necessarily seeing tax returns for. And so, they want to be sure that things are being done according to the tax code.
Mm-hmm. So you've, I imagine you've run into every kind of situation. If you have, we have just like a couple minutes left. If you have one piece of advice for just your average retail consumer interested in crypto markets, about how to best comport themselves, how to best protect themselves as they continue to buy and sell and invest. What would that piece of advice be?
I would say keep great records, because some of the transactions can be complicated. You might forget about them next year, and do that on a continuous basis. And I'll throw in one more. Currently, wash sale rules don't apply to crypto. So if you're going to be holding crypto and you see a downturn, take advantage of that. If you want to sell and capture that loss and then rebuy that asset, you shouldn't do it purely for that purpose, but if it happens to happen that way, it's a great ability to do that. There is pending legislation in the future that would apply wash sales, where if you sold something for a loss and bought it back within 30 days, it wouldn't be allowed. But right now, crypto is not held under that law. And so keep that in mind as you're doing the transactions.
Fantastic. Where can people find out more about Ledgible, more about what you're up to recently? I saw that I saw your Twitter is more active. Theirs didn't seem, the company's doesn't seem to be as active. So where should people go? To the website?
The website, ledgible.io. You can also hit us up on LinkedIn or maybe Twitter. LinkedIn is probably our biggest platform right now for connectivity, and we love to talk to people about crypto and help them out.
Well, thank you so much. Thank you for taking the time to speak with us today, Kell. It was good speaking with you. Hopefully, we'll have you back on again. Maybe we'll meet sometime around April.
That sounds great.
If you aren't too busy, actually. My brother's a CPA, so I run into the same thing. But he handles all that stuff for me because I'm a moron about it. I can't handle it at all.
Well, I wouldn't say that, but I would say, hey, have him give us a call. We're glad to talk to him about helping them.
All right. Thanks, Kell. You're awesome. Thanks for coming on. Good seeing you.
Justin. Appreciate it.
Take care. Bye.
Cheers.
All right, everyone. I like to have sometimes, it's good for you, right? Like the thing is, cryptocurrency is still currency ultimately. This is just a new class of digital assets, and in order for you to benefit from the best long-term strategy that you have to account for all parts, not just flip it over to try and avoid paying taxes on it. You can create a problem for yourself down the road that way. But listen, everyone, take care of yourself. Thank you so much for being here today. I do appreciate you joining me on my little show. Here I'm always, I don't ever have my audio cue lined up in time. So there's a picture of my cat Jinx floating out in space just to kick the show off with. Thank you, everyone. It's been cool hanging out with you. Please take care of yourselves. As always, don't get too stressed out, especially during these times. It's just money after all. Try and take things in stride if you can. Try to go for a walk right here, at least in eastern Pennsylvania, central Pennsylvania. It's kind of beautiful out today. So try to take a moment to think about other things. And thank you very much. Come join us on Monday. We're switching to 4 p.m., so we're not quite as far into the end of the day. 4 p.m. on Monday and Wednesday next week. We have awesome guests coming up, and I hope to see you soon. Please like and subscribe, just because. Why not? Just, costs you nothing to do. It makes me happy. So anyway, thanks, guys. I will see you soon. Peace.